with some of these stocks, and I'm looking at SMCI, that we've been saying, oh, it can't do this. This is unsustainable. And that's the thing, is a lot of times they can go up much further than you think they can. But you also have to remember that a lot of times when they come down, they do come down pretty hard and pretty quick. So I don't feel bad if you have sold early and watched it go up without you, because a lot of times I find in 4 days it can be right back to where you
Yes.
where you sold it. I mean, it really is can happen that quickly, even if you're selling on the way up. So yeah, I think it's just about, again, kind of coming in with your strategy, coming in with your plan, sticking to your plan, but also having the flexibility to recognize, what's happening, and do you need to make alterations to your plan? No general comes into a battle so rigid that they're not willing to change their plan as the battle unfolds. So, and one thing we just have to mention on SMCI, for as much as it's been going up, look at the volume. So I don't think, even if we have SMCI come down, I don't think that this is the end of our discussion of SMCI. I would really be interested to see if this ends up tightening up and giving us another chance, kind of like,
Sure.
what Qualcomm did, and so many others, Taser, and now Axon. When you see that kind of volume come into something, it's like, this is telling you institutions just are really piling into it. And you see this so many times when you have a stock that you can just see the volume pattern change on it. So, but yeah, in terms of the NASDAQ, which is where we're focused market wise, it's hard to fault it for anything. Yes, maybe a little extended, but it's been trending above the 21-day moving average line. We've been in a power trend, 21-day above the 50-day line. This is, these are the markets that we hope for. But again, that doesn't mean that they're easy.
And SMCI is like up, like up almost, it's more than 50% in 2 weeks, right? That's one of those Climax top.
The tricky thing is, though, it did have a very long base, that it came out of. And usually, I mean, there are some cases where,
but it is late stage. It is a later stage,
and that's the tricky part. That's the tricky part, because a lot of times, I would say, and late stage bases, for as much as we say, hey, they're more failure prone, they're also very prone to, climactic action, right? So, Mike Webster, he did a study, and once he got kind of the pattern recognition in place, he did a study where he was like looking at everything, in terms of bases, and some very great work in terms of looking at the overall market, not just the leaders, because usually we focus on the leaders exclusively, but he was kind of looking at everything. And yeah, he found that late stage bases can have some of the best moves, because you get those blow off tops, so those blow off tops can really skew the average of how well the late stage bases do. And again, as long as you have sell rules in place, as long as you're still managing your risk, that's what's important. But one of the things that we talk about, again, late stage bases, the question here is, was this base that we recently had kind of long enough to reset it? Right. I mean, it didn't undercut. Right. It didn't undercut any levels. That's one way we reset bases. Bill at one point was saying, well, bear markets reset bases, but I always struggled with that, because okay, let's say you have a case where you've got a industry that's moving in a bear market, and one of the first examples I can think of is in the 2001 to 2003 bear market after the .com bubble. You had some stocks that were moving, like the home builders. So once 2003 came around, the home builders had a phenomenal run. Stocks like NVR and Pulte Home, and they'd been moving this whole time. So in March, there's no way I would have said, oh, these are coming out of first stage bases. They obviously weren't when you looked at the chart. So I think, the question here is, did this base in SMCI kind of reset things? And so while this action looks climactic, is it a true climax top because it's, is it too close to a base, or is this truly late stage and this could be the end? But again, just with AI being so early in the move, I would be very surprised if this is the end of SMCI.
Well, as you keep talking, Justin, the stock keeps going lower. So,
well, that's
for those shareholders, they're telling you to shut up.
Maybe as the host, I do have the right to mute
the mute button. Yes, exactly.
Right. So don't let me go there. But our very special guest on Tuesdays, David Ryan, has raised his hand and would like to comment. So, David, happy Friday. Welcome.
Hey, thank you. I just put out a tweet saying that SMCI has all those characteristics, and Justin, I'm looking at this market school book that I have that I know you guys don't produce anymore. Chart School.
The Chart School, right?
Yes.
And let me read off the typical climax signals, if I can, for a second.
Yeah,
please.
Often start with a breakaway gap or sharp move up coming off a short consolidation. Now, this did have a 6-month consolidation, but in these examples, there are some that had a big move, a 5-month base, and then a climactic move. Then the second point is up 25 to 50% in more in just 1 to 3 weeks. And this thing
we've got that.
Yeah, we've gotten that. Now, this is what I was looking for. Largest daily point gain since the initial the initial base. And yesterday you did have the largest point move. It was
123 points.
The breakout move on it looks like right around January 19th. And so that's usually the point where everybody says, I can't take it anymore. Gotta get in. And so they go with that. And then one or more exhaustion gaps, which are gaps that occur near the end of a strong directional move in price. We had 3 gaps in a row today. I mean, today was the 3rd gap. It gapped up in price. And then largest weekly price spread that's happened. This hasn't had any stock splits. And the stock is trading excessively over 100% above its 200-day moving average. I don't know. It must be like
it's 235%.
Yep.
Right.
Yesterday,
which puts it in very rare company. 5% of the stocks in our model book stocks got to the level of 200% above the 200-day. So it's in that rare category, 5%.
Yeah. So, and then may coincide with a break above an upper channel line. Now, this thing is up so straight, you would have to draw a channel line on a 60-minute chart. Or then
let me try.
It's almost hard to do it on a daily chart because it's such a. But that's straight up. But that's 3 gaps in a row. It's usually a breakaway gap, an extension gap, and then an exhaustion gap. And we might have gotten that on the opening today, and now we got the reversal. The one thing to look at and be close to examine is what are the other stocks in the group doing? Because if I've always found that market tops, at least in certain or in sectors, correspond with that number one stock having a climactic move.
Let's go back to SMCI. If you were, holding this stock, for the past several weeks or months, is now a good time to take some profits, Arusha?
I would think so. I mean, we already went over many reasons why this is a potential climax top here. So the least it could do, I think, is lighten up on some of it, if not sell the whole thing, right? I mean, starting to fill some of those gaps that was created to hit that 1,000 mark. At this point, so you're locking at least some profits, and for a lot of people, locking all the profits is not a bad idea.